Evergrande stock surges even as major airline plans to sell all its shares. Hong Kong CNN Business. It's crunch time for China's heavily indebted Evergrande Group. The sprawling Chinese real estate conglomerate faces a critical test on Thursday. Can it meet its obligations to bondholders, or will it slip closer to default? Evergrande is due to pay $83.5 million worth of interest on the dollar denominated bond on Thursday, according to data from Refinitiv. It's not clear yet whether the company will make that payment. Investors have already been rattled by the risk that one of China's biggest developers could collapse, sending shockwaves through the world's second biggest economy. The company is also scheduled to pay interest on the yuan bond due the same day, though it has already reached the agreement with the bondholders on that payment, according to a stock exchange filing from Evergrande on Wednesday. Following the announcement, Evergrande's stock rebounded as much as 32% on Thursday as the Hong Kong market reopened following a holiday. The broader Hang Seng Index advanced nearly 2%, boosted by property and financial shares. The focus is now shifted to each dollar bond interest payment due today, after it resolved each domestic bond payment, said Yap John Rong, market strategist for IG Group, in a research report on Thursday. Markets will be awaiting further resolution on each subsequent bond payment in order to have a greater conviction of easing contagion risk, he said. Chinese Estate, the second largest shareholders of Evergrande and the longtime business ally of the company, said Thursday in a stock exchange filing that it has already sold Hong Kong dollar 246.5 million Hong Kong dollars worth of Evergrande shares in the past few weeks. The company may also sell the remaining shares, it added. Chinese estate surged nearly 7% in Hong Kong. Even if Evergrande doesn't make the $83.5 million payment immediately, it may still have some time. The company has a 30-day grace period before officially defaulting, wrote Jeffrey Hawley, senior market analyst for Asia Pacific at Wanda, in a research note this week. But any missed deadline will fuel investor anxiety over the viability of the company. Evergrande is stumbling under $300 billion worth of debt, which is widely held by Chinese financial institutions, retail investors, home buyers, and its suppliers in construction, materials, and design industries. Foreign investors also hold some of its debt. Over the last few weeks, the company warned investors twice that it could default if it's unable to raise money quickly. It's not yet clear whether the company will actually default or whether Beijing will intervene and orchestrate some type of reconstructing to contain the fallout on the financial system and the broader Chinese economy. Will Beijing bail Evergrande out? Real estate accounts for more than 7% of the Chinese economy, and many analysts believe the Chinese government will eventually intervene in some capacity, even if the full bailout is unlikely. We don't expect the government actions to help Evergrande unless systemic stability is at risk, said S&P Global Rating analyst in a research report earlier this week. The government bailout would undermine the campaign to install greater financial discipline in the property sector. Instead of the bailout, the analysts expected the government focus to be guiding Evergrande through the orderly debt reconstructing or bankruptcy process while facilitating negotiations and funding to ensure small investors and home buyers are protected as much as possible. Only if contagion from Evergrande were to cause other large developers to fail, would the government step in directly, they added. But they believe the hit to the financial system from Evergrande alone will still be manageable. Macquarie Group's economists, meanwhile, they also don't think the wholesale bailout of Evergrande is likely. The government would make sure that the free-sold apartments get done and delivered to homebuyers, they said, though they added the shareholders and the lenders could take a big loss. However, Beijing will be keen to avoid any escalation in protest mounted recently by investors and apartment owners who gathered outside Evergrande's headquarters in Shenzhen to demand their money back. Long-standing concerns. Evergrande's troubles have been brewing for a while. In recent years, debt ballooned as it borrowed to finance its various businesses, from housing and electric vehicles to sports and theme park. Then, in August 2020, Beijing started reining in the property sector's excessive borrowing in an attempt to prevent the housing market from overheating and to curb debt growth. In the past few weeks, Evergrande's liquidity crisis has intensified, triggering a further plunge in the company's stocks and bonds. The need to soften the blow for small investors will likely be the focus of the annual restructuring of Evergrande, according to Robert Carnell, head of research for Asia Pacific at ING Economics. He cited Chinese President Xi Jinping's recent emphasis on common prosperity and the need to distribute wealth in the interest of social fairness that alleged has influenced Beijing's sweeping crackdown on tech, finance, education, and other sectors, as it blames the private sector for causing financial risk and exacerbating collapse and inequality.